Hello, everyone, and welcome back to the Make Life Less Taxing podcast, the show where we uncover what really creates freedom in life and business, and we'll explore stories of those who've learned how to build wealth with purpose.
Welcome back to the Make Life Less Taxing podcast. Today, I'm joined by Miguel Palma, founder of Palma Financial Services. He's a tax strategist specializing in wealth creation and strategic planning for business owners and high net worth individuals. Miguel, welcome to the show.
Thank you. Thank you very much. It's good meeting you, Daniel, and thank you for having me in your program.
It's great having you on. Miguel, can you start just by telling us a little bit more about who you are and what is it that you do today?
Absolutely. My name is Miguel Palma, and I started my career at Deloitte in San Francisco. And at Deloitte, it was just the basic, I would say, accounting, doing audits for big corporations at the beginning. And obviously, as you grow within the firm, you get more responsibilities and you learn more. And one of the things that I really got out of there is having advisors. I noticed going into companies, and there would always be the team, right? You have a lawyer, you have the CPA firm. At the time, it was Deloitte, obviously, and then from there, you may have a finance person in-house or a treasurer and the CEO, and obviously, you also have their financial advisor, which is interesting, right? Sometimes it could be an agent selling products, and so it's something that I always caution people. You know, the word financial advisor has to be taken lightly, and we have to really dig in and find out their experience. So from there in San Francisco, I wanted to do high tech. High tech, as you know, here in Silicon Valley is big. So I moved over to Price Waterhouse in Silicon Valley, and I had the pleasure of doing a lot of IPOs and working in the high tech environment. But I always had this interest in working one-on-one with business owners. Well, you work for a big organization, you generally put together the reports, give them the management reports, and on to the next job and the next deadline. But I decided that I was going to leave. And at the time, Deloitte called me back and said, hey, you want to do some consulting? So I left with some work already. And that's when I launched Palma Financial in 1998. When I started, the whole tax strategy, tax advisory was brand new. And one of the things that I noticed is that a lot of times you had a CPA and a client that needed an attorney, they needed an advisor, and they needed a CPA, but those individuals were not working as a cohesive unit. So one of the things I did at the beginning is always put together a team. Obviously, in order to be compliant, you give them options, right? And you go out, give them 3 options, and let them decide. So that was the first thing. And then I started doing tax planning. It wasn't called tax planning then. It was just what I expected or would expect of my CPA. And we would look at the basics, you know, the structure, and do you need a pension plan? I've always believed in passive income. I always believe in real estate. So we would do that. And that's our life, just doing accounting work and providing tax advisory services. And it's interesting because my background was an audit background. So I had to pick up a lot of tax knowledge as I got into the business and I got experience. So real estate has always been a big part of our business.
So it sounds like kind of serving like a quarterback, right? Quarterback to other people in what you're doing for the business owners.
Absolutely. And you are the quarterback, and obviously being the quarterback, when there's a fumble, right? If we're going to be using the same analogy, you're always going to be the one with the problem. So it's very, very critical that you put together the right team, and that you're always responsible. You have to be checking in and make sure that we're clear on action items after every meeting and deliverables and who's responsible for what. Because for some reason, it always falls back on the quarterback, the CPA. And the goal is clear. You know, if you think about it, it's basic. You use the tax law and you use the strategies to build wealth, right? And fund your goals. That's basically it. So I think the number one thing is to remember the tax code is not your enemy. Actually, it could be your secret weapon if you put together a consistent plan and you execute it properly.
No, exactly. No, that's exactly what making life less taxing is. How do we use the tax or the tax code to your benefit? So I always love hearing kind of the origin story. So what was it that originally drew you into the accounting field? Was there a moment where it just kind of clicked for you, or what kind of made you decide to move in that direction?
Very good question. I got married very, very young. I always tell people that I got married at 16. The other day, I was listening to this young lady. She's like an Instagram sensation. She generates about $1 million, it seems, every month.
Mm,
And one of the things that she said is that she got married really young. And I thought it's very rare that you find someone that got married young. And I always tell people it was not a pregnancy did not drive me to get married. My wife was very conservative. I got married at 16 and I needed to get a job. I needed to get a job because we had responsibilities. And one of the things that I noticed is that there are always accounting jobs. It
mm,
doesn't matter if there's a big recession or not. I've always noticed that there were accounting jobs. So that was number one. The other thing is that Nike, I started looking at business leaders, and Phil Knight, I don't know if you know, but he's a CPA. Lee
mm.
Iacocca, who I think he was the CEO of Chrysler and was
Oh,
very prominent at that time. He's also a CPA.
yeah. Oh,
Ted Turner, the founder of CNN, and at one point he owned the Atlanta Braves. He's also a CPA. So to me, it kind of makes sense to go into accounting. It was not natural. I don't come from a wealthy background. My family is poor. So it wasn't something, bonds and options and IPOs, all that stuff was new to me and at times very challenging.
yeah. No, I always loved kind of that Genesis story from there. And so you wanted to go into accounting, you went into there. Then you also worked for many big firms, as you have mentioned. What was it that kind of made you decide to go from more from the corporate side to branch out and start on your own? I know you mentioned that you kind of are passionate about working with business owners. Was there a kind of a specific reason for that, or what was it?
I always knew that's what I wanted to do, but once you are in college, the big leagues, I guess, are perceived to be the big accounting
Mm,
firms. So that was the goal. If you're lucky, they have the fraternities. You're in Beta Alpha Psi, right? So they have pizza night. They take
mm,
you to resume workshops, and they'll invite you over to the firm. And again, if you're blessed, they'll bring you in as a intern. I wasn't. So I had to get into the firms, but that's what we all strive for. At the time, it was the big six. They had six firms.
yeah,
And so that was the number one goal to get hired by Deloitte. If it felt that it was the pinnacle, right? So that's what I wanted to do. Most people go in there, Daniel, and they want to get their CPA license. So they end up going in and they're out of there maybe in 2 years.
mm,
Then they go out to industry, or if they decide they're going to stay, they're going to make a commitment. I think now is 20 years, but back then I think it was 15 years that you had to
mm,
work in the firm, work all the political angles, and get promoted to partner, which is amazing. And at that point, I knew I was going to go in there, get all the experience that I could. And I always gave myself a little bit of time, but I felt that the niche was there, and I felt that there was a need. And it opened up my eyes. I always saw the advisory team together, and they wouldn't make a move if they didn't talk to. Obviously, the board needed to approve it, but they
yeah.
would talk to the firm, the lawyers, and the financial people. So to me, it was very clear, and that's what I wanted to do, and that's how I started in 1998.
Oh, that's great. Now, you mentioned college, and I know from the little bit of research that I've done on you, you were the first in your family that actually went to college in the U.S. How did that really shape your view on money and success?
For me, college is always a must. I think I was telling you earlier that I immigrated here as a result of a conflict in Nicaragua, where I'm from.
Mm,
But I never wanted to be here. I mean, I just came because I needed to leave. There was a war going on. But as soon as the war ended, I went back. But it was something that was ingrained in us. You needed to go to college, get a good degree, whatever it was, and get a good job. And it's something that it's always been part of my life. It's like getting married. You got to get married. You got to have kids, that sort of stuff. So coming here as an immigrant, it was pretty tough because we all got. It's difficult because
Mm.
you're surviving, right? You got to get a job, maybe work two, three jobs. So going to college is very tough. So I went over there, came out again because the Contras started fighting the Sandinistas, and I had to leave again. And I decided that I was going to go to college. It wasn't easy, Daniel. It wasn't
Mm.
easy because at the time, you get any job. I was a janitor. I was a gardener. I worked at a warehouse, and I would go full time, get work my 8 to 5 job, and then I would go to school from 6 to 10. And being an overachiever, I would always stay there from 10 until 2 in the morning, go to school on Saturdays and Sundays. And then once I got out of school, I figured that I had the discipline, so I was going to go ahead and study for the CPA exam. So I was blessed. I passed the CPA
Mm.
first sitting because I knew that once I started working, it was going to be very difficult to concentrate. How was it? I was very blessed. I had a professor there, Victor Stanton, at a school, and he's the one that says, they don't have too many people that look like you that are CPA. So he really made it his life mission to push me the right way. I didn't even know what a CPA was, to be honest with you. I didn't know that there was such a profession, and he's the one that guided me and coached me to get into accounting and become a CPA, go the big firm route and all that good stuff. So I was very, very blessed to have a mentor.
Yeah, no, that's always great to go and have a mentor and somebody that can kind of shape you and help you because that's the hardest thing. Somehow we sometimes figure out that we got to figure out things on our own. Not having somebody there for us, makes life a lot more challenging. It's a lot easier when somebody can show you because kind of success breeds success. And if somebody or knows what might be the best way to do it, things become a little bit easier. That doesn't mean that life's that easier. It's just a little bit simpler, I guess. Now, who are the clients that you're primarily working with right now? Give us some examples of the type of clients that you work with.
Last night I was reflecting on that, and I thought, what best would be to give you examples. Obviously, we don't want to provide any personal identifying information, but what would be better is just to give you ideas of the different clients that we work with. And if that's okay with you, I
Yeah.
can give you maybe 3, 4 scenarios of clients that we work with. So the first one I want to talk to you is about a very, very sophisticated lawyer. And when she came to us, she was already doing a lot of the good stuff. She just needed, you talked about CPA being the quarterback. And I think that that's what she needed. She had done a lot on her own. So when she came to us, I think she was paying about $500,000 a year. Her firm consistently makes anywhere between $3 to $4 million. And one of the things we noticed is she had a ton of property. And the other thing was that she was running a very, very good organization. It was very structured. She's detail oriented and very proactive. So she was probably working 15, 20 hours a week. And to me,
Mm.
that was just amazing. And again, it's just, she's very astute. And I say, let's look at this. And we put together a plan. We were going to look at her pension plan. She has a cash balance plan. So one of the things was to look at the design of the plan that she's had for 2, 3 years at the time. And let's get this maximized. Let's bring in your spouse into the firm, give them real assignments so they can work and get a paycheck. And now we have 2 family members getting a defined benefit plan.
Mm.
So we did that. The other thing that I noticed is that she has a passion for properties. So we went ahead and structured her time so she can devote 750 hours to managing her properties. And we were able to put it together where she qualified as a real estate professional. She qualified for the real estate professional status. What does that mean? You don't have to be a broker. You don't need to have a license. What it means is if we're able to get to 750 hours, you can deduct your passive losses against your
Mm.
W-2 or against the K-1. And obviously, you got to document it. And being conservative as I am, I always require 1,000 hours because we're always ready to fight, right? If there's an audit,
Yeah.
we're good advocates. and we want to make sure that we always win. So I always put 25% as cushion, and you got to detail the activities. This is what I did. Let's say you have repairs that have to go on. So you were contacting the contractors, scoping out the work, managing the project. That would be put down as the activity, and that would be something that qualifies. Then we showed her how to keep track of it. And we like an application, I think it's called Clickable, and it's free. And we always tell our clients to do it. And if you're not into the app, just use Google Sheets. But that is very critical. So that was the second thing that we did. At one point, she wanted to sell the practice. And I said, no, don't sell it. You know, people would love to have 500,000 or more coming in with perks. So now let's look at why is it that you want to sell? Well, I want to cut back my time, but you're only working 20 hours a week. And I said, but we can structure it so you're working 10, 15 hours and you devote more time into this. And she's really into sport and fitness. And we went ahead and did that. And one of the things, we actually went through the entire exercise where she was looking to sell. But I think once we showed her the numbers, she agreed with us and she decided to keep the firm. So what we did is we put together a bonus plan, and we call it profit sharing. But when most people think of profit sharing is where you give the money to people and it's locked in for 20, 30 years. With this, it was just a bonus plan. At the end of the year, they would get a certain amount of the profits of the business if they achieved certain goals that were established by her. And so far, it's working really great. You know, the staff, the associates are very happy, and she's working less time, and she's able to keep the perks. Now, the biggest challenge is the firm is growing, but we managed on the second year to get her taxes by half. By the third year, we have it down to zero. Now, as her practice grows, we're having the challenge now that she has taxable income again. So we got to implement some things to eliminate that. So for most clients, we implement 3 to 4 strategies, and that's often enough. But like her, if now that we're seeing her income is increasing, we got to go back to the drawing board and come up with 2 more strategies so we can get rid of the taxes.
Yeah, no, that's a really great example. And what it sounds like you're telling me that you're not like a traditional CPA or an accountant. Often, you know, when we do talk about it on the show, that a lot of them are kind of more like historians or they don't do any proactive planning. What I'm hearing you say, what you do different is that you're a lot more proactive in what you do. And what I've actually heard, you go even beyond that, because some of the things that you've mentioned as far as looking at how to structuring her time, that goes way beyond just like numbers, all of that stuff. It's really more of like helping them to really create a certain lifestyle or a certain way how to manage, their, not only their time, but really their business and how they're really structuring what they're doing.
Absolutely. And I believe that everybody wants to build wealth and minimize their taxes. But the problem is lack of consistency. I think that's what having a huge bill is all about, lack of consistency. So one of the things that we do or try to establish is create a cadence of meetings, right? So it becomes automatic. It's not easy. We got to stay on top of people, and sometimes we got to get them back in line. But really, that's all that needs to happen as you set up the meetings, as long as we get the system set up properly where they're used to it, is something that is fun and they can see. I always call it the report card at the end of the year, right? We do all this work during the year, and then when we file either April or October, September, October, then they reap the rewards. And I think that's always a lot of fun. It's interesting that you mentioned that. Yes, we go, a lot of people now are offering tax planning and tax advisory. One of the things that I always enjoy is having a relationship with my client in the sense that it goes beyond numbers, right? After a while, if you don't have a relationship, you don't know what's going on with their life, I think you're going to miss a lot of things. Obviously, we don't want to be nosy. Whatever they want to share, they share. But it becomes really easy when they realize that you're an advocate and you have the best, you have good intentions. And I think that's the main thing. So I'll give you an idea of a client that we have. They're young, they have 2 dental practices, And we're in California, but we serve clients all across, anywhere from Hawaii to North Carolina, New York. But one of the things that I always push is go out and have a company retreat, right? You need to make sure everybody's on board and they know your mission, they know what that you're trying to achieve. And I think if you get buy-in and everybody feels like they're part of the team, it makes things a little bit easier. So right now, because I suggested that last year, the clients remember, and they're sending me their plans for the retreats. So I just got an agenda, and they're going to be taking the entire team to a place in Asia. And now I'm reviewing that to make sure that it's going to comply with the IRS standards. That is not fun. There's going to be some real work that is going to be done. So again, we want to get the deduction, but we want to be ready if the IRS ever comes knocking. So I spent a significant amount of time yesterday looking at that. And now we're studying some questions. And sometimes I'm really blunt, is this a vacation or is this really business related?
Yeah.
And I think that depending on the answer, do you have an agenda? Are you going to be, do you have deliverables? What are the objectives? Are people going to be signing in? Just like you and I are used to whenever we go for professional classes, right? So I think that that's my job. Yes, we want to cut taxes, but we also have professional standards to meet, that everything we do is by the law. There's if we don't have something in the code, we go to president. President would be any court cases or anything that the IRS came with later on. So we don't make the stuff up. And one of the things that we see now on social media is we're putting together a series of myths, all kinds of crazy stuff out there. And by the way, we end up spending a lot of time where these doctors, lawyers, or real estate investors see this stuff and they come back with the craziest thing, and then we have to be the bad guys and say, that doesn't work. Pretty wild stuff.
Yeah, no, I can imagine there was a lot of things, and again, a lot of hype around stuff, and yeah, just because it's hype doesn't necessarily mean that it's, you're able to go and do it. You still have to go and follow the IRS code and knowing exactly what's done. So what's one of the biggest or most common mistakes that you see that either business owners or high income W-2 employees or professionals are making when it comes down, their taxes or their wealth planning?
I think number one is mindset. It's not, taxes are taxes, but I always go back to this ruling. The Supreme Court said that, I always tell people, you're required to pay taxes, but you're not required to leave a tip, right? The Supreme Court said that you can arrange your affairs to pay the least amount of money. It's actually in the law, right? So I think a lot of it is mindset. Also, another issue is lack of consistency, right? If we say this, and it breaks my heart, I got to tell you, if somebody signs an engagement and then we try to meet with them, and then it's a team effort, right? So we put together a plan. There's certain things that they have to do, right? There are certain things that they have to get back to us on. We try to do the heavy lifting. Believe me, we'll do anything we can do to help them out. In some cases, we'll pick up, because anybody can talk about strategies, but the question is, how do you implement it? I think that's where the challenge becomes at times, right? Because everybody knows the Augusta rule is very popular. I don't quite like the rule, but people will talk about that all the time. Well, I think that for high earning individuals, their time is gold, right? So if somebody's making the kind of money our clients are making, their hourly rate, Daniel, is anywhere between $500 to $2,000, right? So if we're going to be asking someone to invest time, there's got to be definitely a return on investment, meaning that the effort you're putting in is something that is going to be worthwhile in terms of the savings. So I think that the main thing is mindset, also consistency. If you sign the agreement with us, we love having you as a client, but work with us so we can achieve the goal. There's nothing worse to us where we fail to deliver because you fail to partner up with us, right? And
Mm.
we're not saying it's bad, stuff happens, but we have some cases where it's heartbreaking, to see someone. I have clients that pay $1 million, $2 million a year, and we're in the fifth year and they're not consistent. They're not doing what they need to do. So one of the things I always tell people, it's great to have you as a client, but are you willing to meet with us? And I exaggerate, right? I'll say 8 times, 12 times a year. Sometimes I think that if we meet 6 times a year, we're okay as long as we are able to communicate. So to me, that's really the main thing, mindset and consistency.
Yeah. No, I love the fact that you said mindset because I'm 100% agreeing with that. It's kind of the whole idea. What you can bring, the horse to the water, you can make the horse drink. The only way you can make them drink if you make them thirsty. But that's a whole nother thing when it comes down to it. And I think unfortunately a lot of people, they like the strategies and they like the ideas, but really it doesn't matter until you implement them. And
Yeah,
we found out often with people that they get excited about it and then they forget that just because you know it, knowledge is not doing, right?
absolutely. And you'll find that everybody knows about these strategies, right?
Mm,
They're out there at social media and it's fine. I mean, it's fine to know. But like you said, really, I think knowing in this case is probably 20, 25%. The implementation is the key because you got to do
mm,
it right. You got to be compliant. And some of the craziness out there, that's where you test it and you say, it doesn't work. Right now, for instance, I would urge your viewers, this is the key. This is the key. Right now, I would say is the most important part of the year.
mm.
Do you know why, Daniel? When it comes to taxes?
Well, you kind of, I'm sure it's going to be maybe something similar to it, but well, it's the end of the year and this is the last chance that you have that. But you already know what has happened up to this year, so you can do a little bit more planning of knowing what some of those possible numbers at the end of the year were, or at least that's what I'm thinking. So you got me intrigued. You tell me more.
Yeah, and number one, I want to apologize. I didn't want to put you on the spot, but you got it right. I think you've been doing this long enough. I mean, this is it. We got to get things done now. We have 2 more months. We got to meet whatever's outstanding for the prior year. We'll go ahead and implement it and make sure that it's done before December. After December, there are 1 or 2 more things that we can do, but really, and there's significant things that we can do to pay your taxes. But I would say let's go ahead and get it all done before the end of the year because we know exactly where you're going to be. Right now, we can tell you exactly where you're going to be in April, September, October, because we're able to do the work. We're able to look at the numbers and say, this is what you're going to have to pay. We have a client right now that she's great. The attorney again, right? If
Mm,
you work with that, you're going to get the best results. She tells us, okay, this is how much I'm expecting in revenue. This is how much I'm able to defer. And I don't know if you know this, but with attorneys, there's a law that if they get a case settled, they can take a portion of that or the whole thing and defer it.
mm,
And they don't pick it up as taxes, right? So we can say, okay, you're going to have a big case coming in the last quarter. Let's defer that. And it's only a deferral, right? You got to pick up the income the following year or the year thereafter. So we monitor that. Not only how much are we going to defer, but how much is coming in as income. And then the different expenses that are coming in, we look at. I told you I'm a big fan of cash balance plans, defined benefit plans. I think
mm,
they're good, but I think one of the problems that we have is that a lot of people push that. But I believe in tax diversification. What does that mean? Yes, you get the tax deduction on the qualified plan. And yes, we're building a bomb, right? And whenever I say that, people get scared. We're building a tax bomb because
mm,
when you retire, you're going to be paying taxes on that.
yeah,
So people believe they're going to have deduction. That may or may not be. But what I believe is let's set up another bucket. So you got the taxable bucket, and then you got the non-taxable bucket. I think we need to combine both. Why? If taxes go up, we take money out of the
yeah.
non-taxable bucket. If taxes go down, we take it out of the taxable bucket. And again, those are things that I don't see people talking about, but it's something that we got to do. So to summarize, last quarter of the year, this is it. Showtime, right? Very important. And also make sure that you have two buckets, one that is taxable and another one that is non-taxable.
Yeah, no, that's really good advice. Now, I know we talked about mindset, but why do you think that so many people always wait till the last minute to either get help, even when they know they need it, but they just kind of wait for it? Like, do you think that there was something more than just the mindset around it, or why would that be?
I don't think if you were to ask somebody, hey, how come you like to write that check for $1 million or $2 million every year? And every year they're complaining about it. They hate it. But every year we do the same thing. So it could be something that is coming from their family, right? Maybe they grew up and their family never talked about money. Maybe you never had money to talk about it, right? If you grew up poor, you need to pay the rent, buy gas, buy groceries. And in some instances, you didn't have enough, right? So I think that that may be part of it. I believe that there's not objective financial literacy. We do have a problem in this country. I believe that financial literacy that is objective. I think there's a lot of literacy out there that is not necessarily objective and truthful. Is missing. I believe that every high schooler should pass a test on basic financial literacy before they graduate. And I think they should know about, now people don't use the checkbook, right? But balancing a bank account, talking a little bit about budgets, right? Set up a percentage that you're going to put away. Buy a house and what are the benefits of buying a house, buying investment properties, talk a little bit about taxes. And I think it can be done. And I think that's very important. So there is, I believe, a lot of that goes on. And I think that some folks just don't know. It's hard to believe that some people don't know that really filing is part of it, right? You got to file it. That's okay. You're compliant. But also you have a right as a tax-paying American to organize your affairs so you're paying the right amount or a reasonable amount. I always tell it, you're not required by the IRS to leave a tip. What's your experience? Why do you think people do that?
I think it is the lack of information. It's the lack of kind of education. I think that's really what it comes down to. I mean, you were talking about balancing checkbook and all this. I remember working with a client where she was managing a $3 million budget at her company. But when it came to her personal finance, completely clueless. And I'm like, this is scary. Like you're managing $3 million for a company, but you can't balance your own checkbook. Like, hold on, there is a significant challenge. And I think what a lot of companies or individuals don't realize that when there is a lack of basic financial knowledge, that there is a lot of time that's being wasted, and it's a drain on the workforce for a business. For an example, when somebody's worried about their finances, they're not really productive at work. And when I was an advisor, there was some research and things that I have done. I think there was an institute where they deal with all of this, and the statistics were quite frightening. Where if you have 20 employees, how much money is actually being drained from the company because of the lower activity? Because when somebody's stressed about making a payment on a bill, whatever that is, they're not fully present and working. So there is a drop in productivity. So it affects things outside of just like when we're talking about the money and how it's affecting. And I think people on the individual basis, I think, it is just lack of education. And I do agree with you that, I know how did I learn, about finances and all of that stuff. And I was in the financial industry, and also in there are a lot of misconceptions, even going through my CFP designation and all that. So there is a lot of things. And I think the basic stuff really needs to be taught at a certain level. And I think at this point, it's really left up to the parents. But the problem with the parents is that they were never taught. So they don't know how to do it. So we're unfortunately kind of in this loop where, nobody really knows what needs to happen. And I think the kids these days are dealing with challenges and issues when it comes down to money that, their parents or us never had to really go and deal with. With the ease of credit and credit cards and all of this stuff. And I do believe that, some businesses are preying unfortunately, on unsuspecting individuals, and they take advantage of them.
I mean, Amazon, I always kid with people, but I always tell them that it takes me back to my warehouse days, right? Because I always hear the bell And my kids, because they're working, they send their packages here. So I'll go out and pick up packages I want to say every day, but you know what I mean. Amazon, when it comes to your finances, is convenient. Don't want to knock Amazon, but I think it's terrible when it comes to finances because it's so easy
So
now to buy. Before you had to drive to the mall, right? Before and hand out your credit card. Now it's just a matter of probably you can do it in 3 clicks, and now you just bought something that you don't need, right? So
well,
I think that going back to the financial literacy, someone like you, right? And this is not a plug, it's not something you and I talked about, right? It wasn't pre-planned, but somebody like you can add a lot of value. You mentioned efficiency, wasted time because people are worried about rent or the unexpected bill. I don't know what the amount is. I think it's $500, right? You hear this number all the time, or $1,000 that some Americans, I don't know what the percentage is, cannot handle an emergency expense, right? Because they don't have the funds. So someone like you coming into a company, you're not selling services, right? All you're doing is teaching finances. All you're doing is teaching the basics. And again, you're being objective, right? You're not selling anything, so you don't have an agenda. I think most companies should consider this, especially large companies. I know that they invite people to come in. I know that. I work for large companies and I've been invited to go in. But a lot of times I think that the requirements should be more and more education, or not education couch as education to sell a product. So someone like you can definitely add a lot to businesses.
Yeah, no, it's the, again, it comes down to just the, the basic kind of education and helping them just to have an understanding of what it's all about. Now, what's something when, about your work that you do that basically people, we're talking about misconception, but the client, the people that you're working with, is there a lot of misconception as far as the work that you do and how you help somebody?
Yeah, I think that most people have never had someone that is proactive, right? So we're used to someone being reactive, right? You go in and the accountant is reactive. And even if you sign up with the tax advisor, I think that sometimes being proactive, and the other thing is that if we notice someone is having problems, and we have that. Somebody has problems following directions, they're not giving us the deliverables. uh, our team probably hates it, but I've been known to say, okay, we'll set up a time and we'll make it a work meeting. So get ready. We're going to get this done. We'll go in with an agenda. And because we hate to be following up on the same thing, right? And you've been in the business, if you follow up with someone, hey, we need this paperwork signed, they don't sign it. It's frustrating for them and it's frustrating for us. So we like to get it done now. So we like to go into a meeting and get it done. So I think that probably getting back to mindset is we're not going to do all the work. We're going to do the majority of it. But we have to be partners in this. Otherwise, we're not going to get the results. Some people say, okay, can you guarantee the savings? And we say, well, we know what we do, but we can't guarantee that you're going to be the partner that we require in order to deliver what we promise, right? So we can't guarantee savings, and that's very important to know. The other thing is circumstances sometimes change, right? And that needs to be communicated to us. So I think that's the biggest thing. It's not something where you come in, you sign an engagement with us, and we're going to take care of it all. We need you, like for instance, this client that is going out on a retreat. We'll do the board minutes. We'll do everything there is that we can take off the plate so we can get the strategy done. But we need to know, okay, what are the deliverables? What are you going to be teaching? What are you going to be learning? We want to make sure this is not a fun trip. And if it is, let us know. It's just not deductible. So the exchange, the partnership, I think that's very important.
Yeah. No, you bring a great point. So how do you help somebody, just move from thinking just about, and most people think about the tax season, they think about taxes, like in April or whenever they have to go and pay them, to actually start thinking about, hey, you know what, taxes are actually there to really help you to build, long-term wealth or actually go and make more money because of the taxes that you're paying.
I think the first thing, and I'll tell you the process, right? So somebody goes to our website, mpalma.com. and they'll go in there and they'll book the first meeting. And the first meeting is we'll talk, we'll find out what is going on. And then from there, we'll tell them, upload your taxes and we'll review the last 2, 3 years and also upload your information for this year. And again, some of the problems that we have is that people do their own bookkeeping, but they don't. So that's something that I would encourage everybody. You're making $2, $3, $4,000 or $400 a month. You can hire someone to do your bookkeeping, and that's something that we do. And we have individuals that we have a doctor, a radiologist that is pulling in $3, $4 million. He likes to do his bookkeeping, but it's garbage, right? So he finally listened to us, and he always wants to take it back. So that's very important. So let's go back to the process. They sign in, they book the appointment. We meet, very pleasant appointment, and we find out what it is that is going on and what the pain is. And obviously the pain is the CPA doesn't email me back, doesn't respond to my questions. They're not proactive. They're just filing, and there's no game plan, right? So when we analyze the tax return, I would say 50 to 60% of the time, we find errors. And I'm not promising everybody that we'll find an error, but we found errors where we're getting people $185,000 to $500,000 back. The last client that we worked with, there were some errors on the stock options and how it's reported. A common error is that Schwab or E-Trade, a lot of times the cost they report is understated, right? So the client ends up paying a lot of taxes because they're already paid ordinary income taxes on the paycheck, right? So that needs to be added to the tax basis. And so we found a client that they had errors for the last 3 years. We got them a significant check. So we amended the returns, no problems. And it took them a while to get the money from the IRS. So that was another property. It was great to do that. So we'll review the taxes, and then we'll come up with the plan for the current year. And depending when they come on, right, we got to hit the ground running, or we have a little bit more time. So right now, if we get someone now, we know what we need to do, but we have 2 months to get it done. Again, we'll do the heavy lifting, but they gotta help us. And most people, I would say, when they come in, they're very excited, they want to do it. And as long as we stay on top of it, it'll get done. So from there, we continue to implement the strategies. And like I told you, the report card is when we file the taxes and they see that all their hard work paid off. But one of the ways to incentivize people is to say, okay, if you do this, this is the savings, right? If you're able to, let's say, hire your spouse and you're able to put this much away, you're going to be saving $40,000, $50,000, right? And it's got to be legal. They got to do work and all that wonderful stuff. So I think that's one way to do it. That's our process.
No, that, as you mentioned, that could be quite significant. You mentioned some of the mistakes or things that are kind of missed. So that's really important to make sure that people go over it. And sometimes when I'm hearing you just even get a second opinion, you might be working with somebody or you're doing something, that would be a great way of bringing that up. Now, is there something new? I mean, things change all the time where it comes down to finances and all this. Are there some projects or things that you're working on right now within Palma Financial Group right now?
We want to be you. We want to start podcasting. We want to do that. And our team has been pushing me for a long time to do this. And I just need to get a background like yours, which is something I was going to ask you. I got to figure out what equipment we need. And I love writing. The way we grew the firm was just writing a newsletter a day. And I wrote the newsletter for many years, and we still do. So I would encourage your audience to go out and just give us their email, and we'll continue to do that. So that's something that we've done. We're trying to experiment a little bit with YouTube and TikTok. That's where I started. I know TikTok is probably not the best way to get clients, but I wanted to learn. And I'm learning a lot about the social media angle, how you put together a YouTube video and how you structure it and how you keep people hooked for the first 3 seconds, right? Because that's what it takes for somebody to come on. But we want to go in there and provide education. We also want to provide information about all these myths. I mean, it's just tiring And it's putting us in a bad place because we're having to go back to our clients that doesn't work. That doesn't work. That's illegal. It's going to get you in trouble. So those would be the two things: educate via social media, videos. I would like to, like I said, do some of this, and then start first with videos and putting that material out there. And the next thing is maybe doing a podcast. I don't know that I can put in all this time, but it's something exciting for me. It's something that I'm learning a lot: how to put together a video, how to write the hooks so people can look at it, also the graphics, right? So somebody can pick it up in a second. Over the weekend, I was looking at the wealth gap, and I was amazed to see the numbers. It's the gap is just crazy. And sometimes I think working in this environment, Daniel, we forget. It's not that I forget, but we forget that there are people out there that are having a hard time with things.
Yeah.
The medium, I was surprised to find that I would say the medium is 80,000, right? So 80,000 sounds like a lot, but if you live in New York or you live in California, that's minimum wage.
That's being poor.
Yeah, that's been poor, right?
Yeah.
I think that I always do the math. And I always tell people, look, to live in the Bay Area, to live in New York, you need at least 110, 120,000. But people are making 80,000. And also, what is the real amount, right? With inflation costs going up, then the lower aspect of that, and that's what breaks my heart, is 18,000, right? It's 18,000. And then the upper scale where we are, I would say the majority of people that we work with on a regular basis, give and take, right? I don't want to sound elitist. I come from a very modest background. I still have a very modest background. Are people making $600,000 or more? And you can talk about it and we can agree and disagree. But the bottom line is that, I think that something has to be done to take care of that. Which way, I don't know. But right now, the law is the law that we're dealing with, right? So I really believe in the free market. People have to maximize what they have been given and what they're generating. And they also need to apply the law as it is. And right now, the law allows us to arrange our affairs to minimize our taxes. What does that mean? We can create housing, right? If we go out, buy properties, we're creating housing. If we go out and start a business, we're providing employment. And if we're sponsoring a school, we're sponsoring a team, yes, we get a tax deduction, but we're also helping the community. And some of our clients are doing well. So then we start talking about charitable foundations. We're talking about charitable LLCs. And that's something that we encourage, and we can do that as well, right? So we're dealing from the very beginning, right? Where you start out, where you build a lot of wealth, and now you're looking at helping out with society. So it's great that we've been around for 30 years. So we see a lot of that. We have clients that have been with us 15, 20 years. I don't know how much time we have, but I wanted to give you an example of someone that
you're good. Go ahead.
That is a very dear friend. So my friend, I met him back in the old days. You had to go in, right, and do this seminar in front of an audience. And I used to get invited a lot to go in and do seminars for financial advisors, how to use the tax code to sell, and then also by real estate groups to go in and talk about the tax code, which I think is phenomenal, right? The tax code, you don't have to. I always tell people, if you're in real estate, you don't have to pay taxes, right? We know somebody famous that never paid taxes, right? Very, very famous. And it's because, I'm not saying it's right or wrong, it's the law. The law is set up so you can get in real estate and not pay taxes. So this friend of mine, engineers, married the person that he fell in love with when they were middle school. And they're both engineers, very successful. But at one point, he got tired of the 8 to 5. And he said, I'm going to go out and set up my company. And he did. He went out and set up an SEO company. And we started working together. But one of the things I told him is, let's just put a plan for the next 10 years to see
Mm.
where you're going to be. So the first one was, okay, we need to get the income going and make sure that that is successful. And once you have it running in automatic, what else would you like to do? And then I suggested nicely that he should get into real estate. And then he took off. It got to a point where he was flipping houses. And the way he flips houses, really, that's why I love this guy, is that he'll find someone to do the work and he'll split the profit with them.
Mm.
He'll give him 50% and he'll keep 50%. So he had started acquiring houses primarily all across the US, flipping houses here in the Bay Area, and then also getting some buildings, and the rentals were growing. So you know where this is going, right? So we were able to eliminate his taxes because he became he acquired the real estate professional status. And I smile sometimes when I think about this because he loves playing. So at one point he was doing very well. And I think you mentioned the Poor Dad, Rich Dad. One of the books that impacted me a lot was The Millionaire Next Door. Have you read that book?
Yeah.
Okay.
Yeah. Stanley. I can't remember his first name, but Stanley.
I don't remember his
Yeah.
name. I did a long, long time ago. But this guy, I think he's the embodiment of this book. You know, one of the things that he did, I remember at 40, 45, he was really excited. Hey, I bought my first brand new car. This is a millionaire, right?
Yeah.
And he bought his first Lexus. And I thought, you know, this tells me a lot about this guy. And then later on, he came back to me and says, you know, I want to start getting into flying. So I want to take some lessons. And I say, you know what? You start doing that, and we'll figure out a way to make it tax deductible. And one of the requirements, right? You hear this a lot in social media, is that it's got to be ordinary and necessary, right? So in order to get a deduction. Well, since he was acquired, the Bay Area, the prices were going through the roof. And generally throughout the US, you'll find that, right? Whatever the financial center is of the industries, the prices are very high. And you have to go outside, drive maybe an hour or two so you can afford a house. So he noticed that, and the return on investment was not there. So he started driving 3, 4, 5 hours to find good deals. And one of the deals he was working was one in Ukiah, which I believe, I've never been there, but I think is 5, 6 hours away from the Bay Area. So then we put together a plan, and I say, you know, you're more efficient if you're able to fly somewhere instead of driving for 6 hours, right? And then come back and work on something else. And we were able to show that he was efficient. We have the time logs. Again, we're able to substantiate that. So I'm happy to report to you that we were able to write off the amount that he used for business, right? If he was using 10, 20% for fun, we didn't write that off, but we were able to write a significant portion of the plane. And we've done this with a few clients. We did it with an insurance agent as well that had clients in rural areas, and it was very tough for him to fly and then drive for 2, 3 hours. And it definitely makes sense. So that to me is fun.
Yeah. No, it sounds like really what's the most important part is not how much you make, is what you keep out of it, right? I mean, first, obviously, you got to make something if you're making anything.
Right.
But if you go and make it, it's a matter of how do you figure out how you keep as much of it, and using the IRS code. We call it the less advertised benefits of the IRS code to your benefit, you know, and talking about that famous person. Yeah, what did it make him when he didn't pay tax? It just made him smart. That's it. You know, he wasn't special. He was just, you know, he was smart. Now, as we come to the close of the show, I've got 4, I call them the rapid fire questions. They're fairly simple and easy questions to go and answer. So the first one is, what's your favorite book that has shaped your thinking?
I think that book that I just mentioned is one of them. Obviously, the Bible. There's so many things there, and you don't have to be. I don't consider myself to be religious per se, but I think the book it just gives you some guidance on how to live. I really believe that if you follow the Bible, you can live healthy.
Yeah.
Right, because it tells you what to eat.
It's the number one book answer for this question, so you're in good company when it comes down to it, being the Bible. So you don't have to explain.
Don't ask me to quote a verse now. Which one is my favorite? Then I would be in trouble.
What's a morning routine or habit that you can't live without?
I like to get up in the morning, and sometimes I'm not even up, but I before I go to bed and after I go to bed, and I hope my mom doesn't see this, but it's not that I pray, but I'm grateful, right? So I give thanks growing up well, I lived there until I was 11. I know what it is to live without water, right? The
Mm,
water only comes in for a few hours, so you got to take a shower, save the water. So the fact that I have running water is,
mm,
I'm grateful for that. The fact that we have green trees, grateful for that.
mm,
The fact that I can call and somebody will come and give me some assistance. So electricity, electricity, to have consistent electricity. The fact that we live in a democracy, right? And that's debatable, but the fact that we live in a democracy is also very important. The fact that my family is healthy. By the way,
mm,
my daughter and my sister were diagnosed with cancer
mm,
last year. And I got to tell you, it doesn't matter how much money you make,
yeah.
right? The health is the most important thing. And I would encourage people to always, always take care of the health, because without that, you're nothing. So grateful,
Yeah,
gratitude.
gratitude. Yeah, no, gratitude. Is really great, and that's really a great advice on that. What's one bucket list that you haven't crossed off yet?
I want to teach. I want to teach. I want to become a professor uh, of one of the local universities. I would like to be able to go in there, have my class, and because I was mentored by a great professor, right?
Mm,
I also had terrible professors. There was this one lady, doctor actually, that told me that I would never amount to anything and I should think of another career and maybe not even college. And I wasn't going to be a CPA. So I think mentors and positive professors, and they're just great. So that would be my goal. And
yeah,
a short-term one is to, again, see if we can get in front of a camera and feel comfortable to get
yeah,
it done.
yeah. No, that's great. What's a surprising hobby or interest that really recharges you?
Walking. I never
Okay.
thought walking would be so much fun.
Yeah.
I do have a back problem, so people are surprised to hear this, but I can't walk very long. So
Mm,
I fell from a ladder when I was 16 years old, and
no.
thought I was going to be paralyzed. And I had a great doctor told me no surgery, just build your core. And now I'm a little bit heavier, but I still have a pretty strong core, but still
Yeah,
the pain is there. So I can
yeah.
walk for maybe 3 minutes and then I have to sit down. And then,
Oh,
but as long as I warm up and sit down, I can walk a little bit longer. So
yeah,
walking for me is very peaceful. And then sitting and just meditating, and again, being grateful
yeah.
for everything that is there.
No, that's great. Now I've got one last question. I call it the hot one. Now, fast forward to the end of your life and imagine that everyone forgot everything that you ever taught them or you showed them, right? So they don't remember anything, but they will have the ability to remember just one most important message from you. What would that message be?
I think family is
Mm,
important and also memories are important, right? Because you'll find people work very, very hard, but and make a lot of money. But then what everybody goes back to is the memories. And I know, I travel a lot. My kids have been all over the place since they were very little. And I would take them out of school. I would take them out of school for a week or two because I believe by traveling, taking them to third world countries, taking them to the Czech Republic, taking them to Ireland, all these places, I believe was good education. But it
mm,
also gave us memories. I think memories are probably one of the most important things that it doesn't matter where you are. Once you're gone, that's what they're going to have. And also people are going to remember how you made them feel.
yeah,
So try to get them to laugh as well.
yeah. No, that's a great message. Wow, what a powerful and perspective shifting conversation, Miguel. Thank you for sharing your journey. And where can people find out a little bit more about you and the work that you do?
We could, the website is mpalma.com, mpalma.com. or they can call the office at 408-295-4963, 408-295-4963, or 927-307-5454. And via email, it would be Miguel, Miguel, at Palma Financial, Palma Financial.com. Daniel,
Perfect.
thank you very much for having me here. I really appreciate it. And let's do it again.
Yeah, no, perfect. No, this has been great. So if you're listening, make sure that you check out Miguel's website or reach out to him by email or by phone. He has created some resources and things for you that, again, you can go and learn and really have and start to build life, what we call the untaxable life, truly live the untaxable lifestyle. Miguel, thank you again for, your time and your message. And remember, making life less taxing isn't just about money. It's about freedom, clarity, and purpose. Keep building wealth, keep protecting your legacy, and keep living the untaxable lifestyle. We'll see you next time on the Make Life Less Taxing podcast. Thank you again, Miguel.
Thank you very much. Do well. Bye-bye now.
Thanks for joining us on this episode of Make Life Less Taxing podcast. Be sure to check out our other top advisor interviews at makelifelesstaxingpodcast.com.